Welcome to the Jill on Money Show. It's Wednesday, October 16th, and we are here trying to help you make better financial decisions that are all about you, about your life, about where you want to go, how you can get there. And we are not here to judge you. We don't care if you have no money. We don't care if you have a lot of money. We know that everybody's a little bit weird about money, and maybe you just need a second or third opinion. Mark and I are both certified financial planners. We are not selling financial planning advice. We are just coaching you. We're mentoring you. We're helping you along your journey. If you would like to put a question, a concern, or something in front of us, just go to our website, jillonmoney.com. Click the Contact Us button, write us a note, and of course, let us know if you'd be willing to come on the air live. We'd love to have you. And while you're on the website, don't forget to sign up for the free weekly newsletter. And you can also check out for free our YouTube show. It's called Jill on Money, powered by The Compound. Today, we are joined by listener Greg, who's on the line from Florida. Hello, Greg. What can we do for you?
Hello, Jill and Mark. I was just really interested in, I feel like I have a pretty solid plan, but I kind of want to know if I needed to fund long-term care, how would I do it? And the reason I have that concern is my mom had dementia. She's deceased, and I've got three sibs that are 78, 80, and 86, and it's there. It's there for a couple of them at least already. So I'm a little worried it's going to hit me, and I don't want to burden my wife and kids. Yeah, it's just, this is life. This is the way things go.
It is. Of course, I just did say to my mother, she was telling, my mom's turning 85, and she said something, I can't remember that word. I'm like, Mom, I can't remember a lot of words. So like life, don't worry about that. Greg, how old are you?
I'm 61.
Oh, so you're like the afterthought kid or what?
Yes, I'm the mistake. I'm the
oh no, you're the little surprise bundle.
Surprise, yes, I was a tax deduction. That's what I kept saying.
And your spouse is how old?
She's 56.
And you said you're retired, right?
Correct.
Is your spouse still working?
No, she's a homemaker. She worked hard raising the kids.
Okay, and how old are those kids?
35, 34, and 27, almost 28.
Okay. So everyone launched?
Mostly so.
Oh gosh. I feel like I can never ask that question to someone who is like 55 to 65 years old. It seems like everybody's like, well, if you don't count the car insurance, the subscriptions, and the $1,000 a month I'm spending for something else. So
well, they're not in the house, and one of them just kind of moved out, so there is progress. But do I think that they have a set plan for themselves? Not exactly, but they're working on it.
I hope that one of them's a doctor. No,
pilot.
A pilot.
Yeah, he's doing well.
Wait, the pilot's good. You get to travel for free, right?
Yeah, that's what I hear. I haven't tried that yet.
Ooh, that's good. Okay. So why don't you tell us a little bit about the assets that you have accumulated to finance this retirement that you are enjoying?
Okay. So I had a Navy and a government civilian career, and I get a pension, which I know you guys like, and I'm very happy to have it. Yeah. And it's actually about $100 a year.
Wow.
Yeah. Cash, T-bills, and certificates at a credit union are $170.
Okay.
We have a taxable account that's $225.
Great.
Pre-tax in the TSP of $550. And in the last 10 years or so, and the last conversions that I've done, I've been able to make the Roth 1.1.
1.1 million?
Yes.
You made it sound like when you said that, like the way your voice went down, you were like one. I thought I was about to write like 100,000. So wow, that's a ton of moolah. And your wife is younger, and her health situation good?
It's good.
Okay.
Yes, good. Her mom's like 78. She's got all of her marbles, and so we're working pretty well.
Any reason that you would have to take care of her mom?
Yes, we most definitely might have to.
Okay. So it's like you get rid of 3 kids, you get one mother-in-law, life is unfair sometimes. But
sandwich.
Yeah,
exactly.
Sandwich thing. It is. It's a real thing. So
Uh,
right now, given your retirement income from that pension, that
mhm.
$100,000 a year, does that cover your needs?
Yes. And we have been getting into, I'm taking about an extra thousand a month from TSP just to kind of, I don't know, to get them. It's funny, you're used to like a check 2 times a month.
That's
I
not,
just,
I want to say something. That's not
uh,
funny. I get that. It's like there's a
uh,
regularity to it that you're like, oh, this is nice. I'm paying
yeah,
myself. This is like basically adding to your pension, right?
right. So
Okay.
right now I'm just doing another, and that's 1,000 a month. So what do I think our needs are? Gosh, I think it's probably around nine a month, and
Okay.
it's been fluctuating because we've been doing the go traveling trips thing a little bit. So, but
Hmm.
it's about that.
Do you own your home in Florida?
We have a mortgage.
Yes, you own your home is the answer.
Okay,
So
yes.
yes, you do. What's
Uh-huh.
the house worth before we do the mortgage?
Most of the ones around here are selling for around five and a half.
Okay. And what is the outstanding mortgage amount?
210,
Okay. What's the interest rate?
375.
Great. Plan to stay there? I mean, it's sort of funny to talk to somebody from Florida because it's like you're not moving to
Boy.
Florida, you're in Florida,
Uh,
but do you want to shift houses or what do you want?
we do want to shift. Tired of the, I don't know,
Upkeep?
like the home insurance and property tax and
Yeah.
hurricanes all around. I mean, overall, like Florida for, no state tax, but I don't know, the environment a little bit too.
All right, but if you were to move somewhere, that would, I mean, I guess, are your kids in Florida? Might that have a change?
I have two kids in Florida and the other one's out west.
If you were to move, have you really started to think about what that would mean for you guys?
No, not exactly. It seems a little daunting. You
Yes.
accumulate things over all this time when I was in the service, and so we have a lot of stuff to send on before we can move somewhere easily.
Okay. So you gotta do that culling. You have to Marie Kondo your house, get rid of all that old crap,
That's right.
move it out,
Uh-huh.
and okay. So what I am hearing from you is the core issue that you're worried about is, look, if something bad happens to me, what happens to my poor wife and the kids?
Hmm.
Because you fear that you might need some assistance. Obviously, it's not
Right.
not a definite thing.
Hmm.
So the question is, if you wanted to think about long-term care, either in insurance or a plan, what would be the best way to do that?
Yes.
Wondering if through your naval service,
Hmm.
is there any opportunity to buy long-term care as a group plan or not?
The federal government had for a while long-term care, and I'm still eligible to purchase it, but they're not accepting new applications as of like 2022. Probably because everybody figured out, man, this is going to cost us an arm and a leg, and
Right,
we're not charging people enough.
right. So you can't get in on that, is what you're saying.
Correct.
Okay.
Not
So
right now, at least.
if we wanted to buy long-term care insurance, we'd have to go out on the marketplace to buy a policy for you, which would be
Right.
expensive. I got to be
Hmm.
honest with you. And of
Hmm.
course, sadly, you can't lie about it. Like they're going to say like, "Oh,
No,
is there dementia in your family?" You're going to be like, "Oh, crap. Now I got that." Right?
that's
So,
right. Right.
I don't think that that may be the best way. So here's the other way to think about it, which is, hey, I've got one, six, seven, I have almost $2 million. And if I needed some assistance, I'd always have that pension coming in. So,
Right.
it's not like you need assistance and you need to replicate all the money, right? You would need some of the money would be defrayed. You
Hmm.
probably, if you are really worried about this, if you were thinking about buying another house in another place, like you would really want to make sure that's in your head about like what's the kind of house we'd want to live in under those circumstances.
You say
I'm
he's got $2 million. I kind of think of it. He's got like $5 million.
all right. Calm down. Don't say that. That's not what because it doesn't matter because then but if he really and the reason why Mark is saying that, everybody, is he is counting the pension. Will you be entitled to Social Security as well?
Yes.
So at 67, What's the Social Security benefit?
3232.
I think that kind of pays for your long-term care if you need it, and your wife's going to get half of it. So,
Right.
I don't think you go out and buy a policy. You have consistent income through your pension and your Social Security. I think that it makes a lot of sense for you to be aware of this as an issue, which is like you're not the normal 61-year-old who might be like, I have so much money, I'm good. Instead of spending, 100 or 120 grand a year, we're going to spend 150 grand a year, which you might do if you were in the kind of person who's like, I have great health outcomes. Everyone in my family's healthy. My mother-in-law is fine and I'm going to inherit $1 million. Like there's a lot of people who live their lives a little bit bigger at this point. I think for you, the idea is that if you needed something later in life, you would have that Social Security income. You probably are not going to spend so much money. And I would be a little bit careful about if you're going to buy another home, right? And you've got this 300 grand of equity or 300 and some month equity. I'm not so keen on you like blowing through a whole bunch of your money to get to like a much different kind of dwelling. That's what I would say. Like, in other words, if you said, I found the greatest house, Jill. It's a 3-bedroom patio, blah, blah, blah. It's part of a homeowner's, da, da, da. It's $1 million. I don't know. I don't love that. I don't love that as a game plan because I think I think that one of the things that we're suggesting is that you can self-insure for long-term care. And if that's the case, we just don't want you to blow through all your money. I think it's great that you take the TSP money out, by the way. And if you are going to move to a more tax unfriendly state, it would also mean to me, you should take more money out of that thrift savings plan.
Right. I would convert it?
Yeah, well, I wouldn't even convert it. I mean, I don't know. I just take the money out and pay the tax that's due. So let's just say you're married filing jointly. You can have income of about 200 grand a year. So that means that the cash and the T-bill income plus your taxable account income plus your pension income, in addition to that, up to about $200,000 keeps you in the 22% bracket. I would do that every year.
Okay.
And I would take that money and I'd throw it in my taxable account. I would not look back. Don't spend it. You can spend some of it. You can spend some of it, not all of it. I guess that I think we're telling you that your long-term care plan is that you will plan to self-insure. You are fortunate in that pension income provides this beautiful base. Just be a little careful. If you need some more help, once you get rid of all the stuff in your house and you're really thinking about another place, if you start to come to a place where you say, I'm really ready to pull the trigger on a place and here's the kind of the money we're looking at, let's talk. Let's see what is the smartest way for you to get into that new place. Okay.
Okay.
Make sense?
Yes. In regards, I mean, I do have estate planning documents and all that stuff. We just redid those. I know this is it's not necessarily off topic, but is a trust a better thing for worries about dementia, or as long as all the accounts have a beneficiary?
Well, I would say
pay on death.
Yeah, if your taxable account is a transfer on death account, then we know a couple of things. So the taxable account transfers on death. The thrift savings plan transfers on death. The Roth transfers on death. The cash and the T-bills, if you have a transfer on death through your bank or the financial institution, that'll do it for you. So then the only thing that would pass, I guess the house would also pass by contract because you own it jointly with your wife. Correct. So I don't think you need a trust. If you're asking me, should I throw everything in an irrevocable or non-changeable trust so that I can qualify for Medicaid? No. You have great services because you served in the Navy. So if you had to, I'm not saying you will. Chances are, the way most of this works, I don't know how it is with your SIBs, people need care in the home before they need anything else. And that's usually what happens. And it's usually like it's a real number, 20, 25, 30 grand a year. That's why I'm looking at that Social Security and saying, that'll do it, I think. Okay. All right. Now play bridge and keep that mind sharp.
Learn bridge. Okay.
Put that on the list. Okay. Anything else for us? You good?
No, I think this really does it.
All right. Greg, I feel like now that you've actually said these words out loud, you're probably going to be okay. Just no dementia for Greg. I'm putting it out in the universe. Everyone, think about it. Hey, listen, I love that you raised this topic. It's a great one. And I'm hopeful that many people start thinking about these future potentials. It's not like a definite, right? So hopefully Greg never needs to ever worry about this, but like at least considering it, especially if you're married, because we don't want to leave your surviving spouse in a rough financial situation. So if you've got a question about this or anything else going on in your financial life, go to our website, JillOnMoney.com, click the Contact Us button, write us a note, let us know if you want to come on the air by checking the box. Don't forget to sign up for the free weekly newsletter and our service called Jill on Money Live. For $35, you have access to quarterly live webinars, our back catalog, bonus content. It's all there. You can subscribe to us on the Odyssey app or wherever you find your favorite podcasts. Please put your hands metaphorically on someone's back. You know what? Someone's taking care of a spouse right now or a friend or a parent, and it's hard work. So reach out to that kind of person who's doing that tough work. Change your work, change your wealth, change your life. Thank you for listening. We'll talk to you tomorrow.